Hello guys, it's Stock Trader Max here and welcome to another video here at Daily Market Movements, where today we are going to be analysing the broad US indexes as well as some other key markets that may determine where this market trades within the next 24 to 48 hours. But starting off here with the economic calendar, today we are expecting to hear from the consumer. We get the CB consumer confidence number expected to come in at 103.9. It'd be interesting to see how that comes in. Don't forget, the consumer really does hold the key to the economy here. If we start to see a weakening consumer, that could potentially signal a recession is on its way. But as it stands, people have jobs, people are getting paid. So there's no real reason as to why the consumer should start to deteriorate significantly from here onwards. The data doesn't really start getting really important until Thursday. Thursday we get the GDP figures, we get the initial jobless claims, we hear from Jerome Powell. But then on Friday, my own humble opinion, I think we have the most important data this week, which is the PCE inflation report. Obviously, after the Fed's 0.5 basis point cut, we need to see inflation start to fall lower now, because if there was any further tick up, then that would be quite alarming. But let's get started here with the S&P 500. We know that we've broken out of this wedge triangle pattern, trading at 5,723. Yesterday we had a new daily close, which was a new all-time high for the S&P 500. So this is very encouraging. What could potentially happen in the coming days is we may get a retest of the previous area of resistance as a new area of support. That's where the 50-day EMA currently sits here on the 4-hour. So that takes you back down towards, let's say, 5,650. If that did happen, I would welcome it. On the RSI, that would help us as well. Our RSI here on the daily, let's just quickly go to the daily chart for the RSI. We're not quite yet considered to be overbought yet. So, maybe we don't need to have a retest of this area of resistance for support. But it is, in my own humble opinion, that we are trading within this 5-wave formation higher, an Elliott wave move higher here, where we're currently in the third wave. This third wave gives us a measured move up towards 6,000 before any retracement may occur. And of course, like with Elliott wave, it's not always spot on, so we could potentially even rally further. We could maybe even peak a little bit earlier. I'm not entirely sure, but at present, the measured move takes us to roughly 6,000, and that's where I do believe the S&P 500 can achieve before the end of the year. Moving over to the Nasdaq 100, again, very similar to the S&P 500, we've broken out of this triangle wedge formation. This is very encouraging. I actually really like this market, and the reason being, I think I did touch on this during yesterday's video, is that we have the S&P 500 and the Dow Jones 30 that are currently trading at all-time highs. Day after day, they've been achieving a brand new all-time high for the past week or so. Nasdaq 100, as you can see, we are still 5% below the previous all-time high. So this does give us a nice runway for the Nasdaq 100 to regain some of those losses that have occurred since the all-time occurred back on the 11th of July 2024. So I do like buying dips here in the Nasdaq 100, but similar to the S&P 500, I do believe what we are currently within this 5-wave formation. If I just go ahead and add the waves, this is what I kind of expect the move to be like. Third wave takes us up to roughly 22,000, so we still have some way to go. I think, just from a percentage perspective, I think it's roughly 9%. Yes, it is 9% move higher until we do complete potentially this third wave. Moving over to the Dow Jones 30, Dow again trading at an all-time high, up in the pre-market today, up around 0.2%, and trading at 42,185. I think the next area of resistance could be up at around 45,000 due to its large psychological presence. If we just look at a few other markets, I want to just focus on the TNX. TNX has ticked up since that Fed meeting that we saw last Wednesday, but ultimately I do expect this to continue to roll over. I think sub 3.5% is where we are heading in the months to come, and that obviously is going to help fuel US equities to move higher. And then if we just quickly move over to the US dollar trading at 100.7, I do expect this to eventually fall below 100. Obviously, a weaker US dollar does benefit US equity prices as well. So I would like to see the TNX and the US dollar fall in the coming days and weeks ahead, which of course will hopefully spark an equity rally or a further equity rally into the end of the year. And then finally, just to wrap up today's video, let's just quickly focus on Bitcoin. Bitcoin trading at 63,500. We've been kind of consolidating the recent gains that we saw late last week over the past 3 or 4 days, obviously over the weekend, but ultimately I do expect this market to trade higher up towards this resistance that trades at around 66,500. Ultimately, I do see us breaking out to a brand new all-time high here. I don't think it'd be crazy to say that Bitcoin could be trading between 90 and 100,000 come the end of the year, which obviously is going to have a very bullish effect on several tech stocks as well. So yeah, that's going to wrap it up for today's video, guys. Don't forget, if you want to join my trading signal group, receive trades, as well as gain access to the Investors Lounge, where I basically update you on the current positions that we have open in a video format. You also gain access to the Educational Hub, where I try and teach you how I trade day to day, how I set up my charts from a technical perspective, what I look for fundamentally. Then you can do this by signing up on my website, dailymarketmovements.com. I've left the website link in the description of today's YouTube video. If you're on X, then just go onto my profile and the link is there. But thank you very much for tuning in, and I will post another video tomorrow. Have a good day, everyone.